Okay, everybody, what's up? Michael Edward here, head trader at True Trading Group. March 23rd, my game plan worked out well. Okay, if you guys missed my video from Friday, go back, check it out. The video was titled What the Stock Market Will Do Next, because on Friday, I entered a swing trade in SPY put options, and today closed that position out for a 64% gain. I bought the $230 strike put options. Today expiration. I bought them on Friday at 570. Got flat them today with my last final take profit at $9.26 for a 64% gain. We had a lot of announcements though, a lot of things that are happening, outside factors going on in the marketplace, with Congress trying to pass an economic stimulus bill, which they have now failed on passing the procedural vote twice, which is outright embarrassing. I'll get to that in a minute. You guys are going to hear me go on a little bit of a rant in this video, which I typically don't do, but I'm so pissed off about what's going on um, in Congress that I'm going to talk about it. So, and then I'm going to get into this SPY option trade. But again, guys, before I do, go back, check out that video that I posted on Friday. If you missed it, I go over the game plan on Friday. And the whole reason, usually I post my end of day recaps after the close. On Friday, I posted at around 3 o'clock Eastern time. So I want to get the trade idea out there to the YouTube community, let you guys know I was buying some SPY put options, holding them overnight, expecting an increase in cases and more strict lockdowns in states to create more selling pressure in the markets. And that's exactly what we got. Last night at 6 p.m. Eastern, when the futures market opens, we gapped down huge. We were down 4.5% when the futures market opened, and the futures were actually halted limit down. I was doing a live stream last night um, to the YouTube community. If you guys joined me on that live stream, thanks for joining me. I had a blast with all of you guys. Um, and we were talking about the futures because as I was doing the live stream, the futures were down big. We were down. The SPY was going to be at around 218, 219. And I would have been looking at probably a 250% gain on those SPY put options. And then this morning at 8 a.m., the Federal Reserve announces QE infinity. Okay. Um, Quantitative easing, just an infinite amount. They came out with a statement today at 8 a.m. saying that they're going to continue to buy assets and to buy securities. They're going to be buying. They're buying corporate bonds. They're buying treasuries. They're buying mortgage-backed securities. They're setting up a lending program for Main Street, not Wall Street, for Main Street. They're setting up a lending program. Um, and they're coming in and they're buying securities, basically saying we're going to buy as much as we need to stabilize markets. That's a great thing that the Fed is doing. I need you guys to understand what the Fed is actually doing with this stimulus. Do not mistake the stock market going down for what the Fed is doing, for what the Fed is doing to be not working. Do not make that mistake. What the Fed is doing is going to save our economy from what could be tremendous disaster. The Fed coming in and buying these securities, buying mortgages, all of these things, providing liquidity to credit markets, injecting cash into the overnight repo market. All of these things are all, this is quantitative easing. That's the term that all of this stuff means when the Fed comes in and starts buying stuff like this, um, and injecting capital and all of that stuff into the markets. What they're doing is, I'll give you guys kind of a quick little, here's an economics lesson. Okay. 2008, why everything was so bad in 2008. We had the housing boom. Housing prices were just on fire. Everybody was taking out mortgages. Everybody was buying real estate. Everybody was buying homes. And the banks and the lenders wanted to take advantage of this boom. And to do so, they started giving out more and more and more and more and more mortgages. To take advantage of the boom, they started to lower their lending criteria, their requirements. So people that would normally be a high risk borrower was now getting mortgages at a much easier rate. And what happens is when the housing bubble burst and housing prices dropped, you had all of these people that could not afford their mortgage. You had people that took out a $500,000 mortgage. Their house is now worth 350 grand. They're going to say, "Why am I going to pay my mortgage for 500 if my house is only worth 350? I'm not going to do that." So the lenders were left with basically these worthless mortgages, or all these mortgages that were underwater. You also had other institutions take advantage of leverage. And what they were doing was, all these other institutions, they want to take advantage of the housing boom. So they were getting leverage on their cash and buying portfolios of mortgage backed securities. So basically, you'll get a fund will say, okay, I'm going to leverage the cash I have. I'm going to get $1 billion and I'm going to buy this portfolio of mortgages, huge portfolio, tens of thousands of mortgages. They're going to buy them. When they did that, they bought them on leverage. So they owe that money back to somebody else. Then, when those mortgages become worthless, you're now holding these worthless assets. And when those institutions tried to sell those assets off, they didn't have a buyer for them. Who would want to buy them? They're worthless. That is when the whole system crumbled. What the Federal Reserve is doing is stepping in saying, anybody that wants to sell stuff, we're going to buy it. It stabilizes the market. It stabilizes the bond market. It stabilizes the credit market. It is not meant to stabilize the equity market. The Fed has not stepped in and said, hey, we're going to buy the SPY. We're going to buy the Dow. We're going to buy Apple. That's not what the Fed is doing. What the Fed is doing is the market will stabilize and will recover once the virus spread is under control and the economy opens back up and lockdowns end. But the other markets and the economy, what the Federal Reserve is doing now is they are firing bazooka missiles. They are shooting nuclear bombs into the economy right now in the form of economic stimulus and quantitative easing that will help the economy recover quicker once this virus is under control. If they did not do this, you could have systemic risk filter through the financial system and have another potential 2008, possibly even worse. The actions that they're doing now are meant to prevent that from happening. So, Federal Reserve, if there's any members of the Fed watching this video, which I assure you there most likely are not, I applaud you. Okay, I applaud you. What you guys are doing, I think, is fantastic. Now, let's get on to my other part, which is my rant. Federal Reserve, A plus rating. Congress, triple F, you all suck. What is happening in Congress, in my opinion, is an absolute disgrace that every single American should be ashamed of. Democrat or Republican does not matter. You should all be ashamed. We have a real moment of crisis. American people need help. Small businesses need help. Now is not the time to be pushing political party biased agendas. And that's what's taking place right now in Congress. They're trying to pass we don't know the final number yet, 1.5, 2 trillion. We don't know the final number yet. Congress is trying to pass an economic stimulus bill that will provide relief to the American people, to small business. Okay. It will provide relief to families that desperately need it right now. And instead of getting to the point and passing the bill, they're going back and forth on irrelevant points. Irrelevant points. I'm not going to get into the points that people are stuck up on because I'm not going to get political on this channel. I never will. But I am so ashamed and embarrassed that not once, but this is now the second time a procedural vote on this bill has failed. That to me is just disgraceful. And if they cannot come to an agreement on this bill, then every single American should vote every single one of them out of office come election time, because that's unacceptable. The American people need help, and you have Americans doing more for Americans than you actually have the people who Americans voted for to help them than what they're doing. You're seeing, I just saw a headline today, which is amazing. Alcohol companies, like beverage companies that make alcohol, are donating actual alcohol to fill hand sanitizer bottles. Amazing. You have all of these other large corporations that are donating money, okay, to different causes. You have Elon Musk saying, you guys need respirators? We'll make respirators. I'm closing down my Tesla factories. We'll make respirators. Okay. You've got The auto industry, they're shutting down their factories. If you guys need to make respirators, we'll make respirators. You have other factories that are being shut down saying we can make medical supplies. Americans are helping Americans. It's about damn time that Congress does the same. I don't care if you're Democrat, you're Republican, you're independent, does not matter. Get the goddamn job done that the American people voted you into office for. Stop the political bias and let's help the American people get through a real time of crisis. And that's my rant. I'm not going to get political. We're not going to talk about parties. Do not comment below about your opinion on Democrats or Republicans. I will delete it. I do not care about political opinions. We will never get political on this channel. That's not why you guys follow my channel. That's not why you watch these videos. But it's important to discuss what's going on because it affects the markets. The markets want to see Congress pass an economic stimulus bill. Now, I think the markets will bounce once this bill is passed, but I think it's fadeable. I have basically shorted every economic stimulus bounce in the market because I've been saying for weeks, I think the bottom will be in when the virus stops spreading so that people can actually calculate what forward looking earnings will look like. Nobody knows what earnings are going to look like Q2, Q3, Q4 because they don't know when the economy is going to come back online. You don't know when the economy is going to come back online until the virus stops spreading. So, health headlines will give us sustained bounces. In the meantime, economic stimulus headlines, I think those bounces get faded. That's what I've been doing. It worked out well for me. Let's talk about my swing trade from yesterday, or excuse me, from Friday, where I bought SPY put options. I came on, I did a live, not a live, excuse me. I posted a video yesterday. Oh my God, sorry, my tongue twisted. I posted a video on Friday. Watch the video. I bought SPY put options right there. The 230 strike, today expiration is at $5.70. And right before the close, we got that big pullback. I said, damn, screw it. I'm going to reduce my risk. They were at $7.88. So I took 25% of my position off the table at 788. Then we had the big gap down in the futures market. 8 a.m., the Fed announces QE infinity is what I'm calling it. And the market rallied. At 8 a.m., the market rallied. We actually went from like 220 on the SPY up to like 237. And I'm like, damn, that's going to hurt me because I got the 230 strike puts and I was like, that's going to hurt. But I thought this move will be faded because again, economic stimulus bounces have faded because what good is economic stimulus if we don't know how much stimulus is needed or we don't know what the effect of the stimulus is going to be until we know how bad is the economic impact. And we don't know that until we know when the economy is going to come back online. So, like we said, the market faded. So we gapped down and ended up selling off the bell. Now at this point, we're much lower than where we closed on Friday. But that action screwed up the premium on my contracts. And because it's same day expiration, okay, they expire today, time decay factors into my options. So I actually, even though the SPY was much lower, I actually sold the bulk of my position at $7.25, even though over here on Friday, I sold 25% at 788. Take you guys to my trade announcements on the day. Let's zoom in. We were active in chat. You guys can see right at the bell, I took a piece off the table at 725, even though, okay, again, 725 on those put options here, even though the market was higher on Friday, I sold them at 788. That's time decay. Okay. And then I held on to this position. We started to bounce back and look at this beautiful resistance in the SPY. As I pan this out, look at this prior pivot low from the 18th. Okay. We gapped below it. I drew a line right across it. That low was our pivot low. Let's go to the daily chart and zoom this in. See that pivot low right here? That's that level. So when we gapped below that today, I said, let's stay beneath that level. It's also Friday's close. So right there, guys, bang, we get hit with resistance and then we roll over and we sell off. And I sold the last piece of those SPY put options right there. Take you guys back to my alerts at $9.26 for a 64% gain on my final take profit. It was a really strong trade and pulled out some really nice P&L on the trade. Okay. So that's how I went ahead and through the means of SPY put options because I thought, guys, please go back and watch the video Friday. It explains my entire thesis on why I entered the trade. So please go back and check it out if you have not yet. And then AYTU, which is actually trading higher now after the close. I lost a little bit of money on AYTU today. I gave some of my profits back, not a lot. Still a nice P&L day. I'll just walk through the setup with you guys. Trade line came into play real quick, guys. I was looking for a trade line VWAP crossover. I got long right there in front of VWAP, looking for a trade line VWAP crossover to push us up to new highs because $2 was a key level. Okay, $2 was a key level. I'll take you guys to the daily chart. Let's go to 15-minute chart, actually. It's easier to see on a 15-minute chart. Here it is. Okay, look at all this resistance. Okay, so that's why I said if we can get through this, I thought we had room. And I thought maybe a trade line VWAP cross would be enough to kind of push us through there. But you can see we never got the trade line cross and we pulled back in and I exited AYTU. Take you guys to my alerts. I'm long at 188. I sold out at 180. Small loss. Nothing really to be upset about. So like I said, I gave back some profit, but very, very little. So all my money today was on those SPY put options, was a home run trade. And we'll see what the markets bring tomorrow. I did not enter any positions regarding the overall markets overnight because I don't know what's going to happen with the stimulus bill. It's pathetic. They couldn't come to an agreement today, but they have to know how important it is to get this bill passed. So I figured maybe there's some headlines and some behind the scenes negotiations going on that could cause a little bit of a gap up. So I'll let the gap up happen. And if it's because of an economic stimulus headline, I'll then look to fade that gap. That's my game plan, guys. That's how I pulled out 64% on SPY options today. And that's what I'll be looking for tomorrow. Tomorrow's TGG Tuesday. The chat room is open free for everybody. Come in chat, say what's up. Trade with me live. You see my screen, you hear me on the mic, you know exactly what I'm doing, why I'm doing it, and most importantly, before I actually do it. Go to truetradinggroup.com, click on TGG Tuesday on the upper right-hand corner, fill out that form, and you will get a link that'll give you access to our chat room for free the whole day. Chat room opens up at 7:30 a.m. Eastern time. I will see you guys in chat, and we'll look forward to kicking some ass and taking some names while we continue to trade through this crazy, crazy, crazy market. I'll see you guys tomorrow. Later.